Gold ticks higher this Tuesday morning, and joining me back from vacation is Peter Hug. Peter, good to see you again.
You're welcome, Daniela.
Peter, let's talk gold now that you're back. Now, we have Russian President Vladimir Putin scheduled to meet with Ukrainian President Poroshenko. We've known about the impact that the Ukrainian-Russian conflict has had on gold. Could this be a game changer?
Well, I still think that there's an underlying bid to the gold market coming out of the Ukraine and to some extent coming out of the Israeli-Hamas situation. And most recently overnight, Obama's clearance to fly surveillance planes over Syria, which may be a precursor to a more aggressive U.S. involvement in that region. But if you take those geopolitical events off the table, I mean, what has hurt the gold market were two things. One, obviously, there was no physical demand at all in August, which was to be expected. Just summer months are just dead. And, in the context of the equity markets continuing to increase in value and, funds flowing into the U.S. dollar, traders, took a shot at the downside and were able to break some significant support levels.
Peter, let's look at what happened with gold with more positive economic data coming out of the U.S. Orders for U.S. durable goods skyrocketed by a record 22.6% in July due to a surge in contracts for Boeing aircraft. What's this data doing to the metal, Peter?
I think what happened with gold overnight, you had gold down in the 70s. It held a fairly significant technical level at 1273 overnight. And, again, with Obama's verbiage last night that he's sending surveillance planes into Syria, traders, they're not stupid. They had a nice profit in there. And if they're uncertain, they're just going to take their profits. And so we're still in August. There's nobody around. And, in a thin market, it doesn't take a lot for a few guys coming in to buy and cover their positions. To pop the market back up, which is what I think we saw this overnight and this morning. When the durable goods orders came out, much better than expected, it actually took something off the gold market. Gold was at 1291 when those numbers were released, and we're now trading at 1287. So I think the durable good orders actually encouraged the bears on, again, the premise that the Fed may move sooner than expected.
Peter, and let's talk about the S&P breaking through 2,000 on Monday. If we see a top out here, if this were to occur, what would be the domino effect?
Again, as I mentioned a few weeks back, it really depends on how, if there is a correction coming, how that correction unfolds. If it unfolds sort of a normal course business, we start losing 100 points here, and then we get a rally of 80, and then we lose 150, and the downtrend is more organized. I think that would be price positive for the metals as some of the capital will be deployed into the commodity space. If the market is one that resembles more a 2008 scenario where you start getting $500, $800 point drops, I think the initial reaction in the metals will be down as people liquidate the metals to generate liquidity and try to meet margin on their stock positions. And then from there, you'll get a rebound back up in the metals. So it'll depend on how the correction in the stock market unfolds, whether it's an extreme move or whether it's orderly. Orderly, I think, is positive for the metals. Extreme, I think, would be negative short term.
All right, Peter, when can we expect traders to head back and get the excitement back?
Oh, they're back next Tuesday. Between now and Thursday, Friday, in my opinion, is almost a write-off day. I think most trading houses are going to be very thinly staffed on Friday. This is the last long weekend in the summer. So we're going to have some position squaring before the Thursday close. So there could be some volatility. It wouldn't surprise me if we saw a 1,300 tick, and it wouldn't surprise me if we saw the market back down at 1275. But the boys are back. Boys and girls, sorry, are back on Tuesday. And, that's when they'll be setting their books up for the final quarter of the year and, organizing their strategies going forward. So I think next week we'll start to see some volume returning to the market.
So, Peter, would you get in the market before they're back?
No, because you don't know which way they're going to play it. I mean, the fundamentals, although there's been some uptick in physical demand in China overnight for physical gold, the fundamental supply-demand situation for gold, there's still lack of physical demand. If that continues into next week, and we get any or more easing of tension on the geopolitical front, gold could just as easily take out that 1273 and start looking to test the downside as it could try to test the upside at 1300. So there's right now I can't determine the trend, but you cannot just assume the trend will be up when they come back.
Fantastic. Thanks so much for joining us today.
Okay, Danielle, look forward to it.
And thanks for watching For Pete's Sake this Tuesday. We'll have more for you throughout the week. In the meantime, email us at newsfeedback@kitco.com. Thanks for watching.